Hello, everybody. Welcome to the Charting Room by TradeStocks.com. My name is Jeremy Blossom. Welcome to the show. I am going to get started here in just a minute. Let's go ahead and let's make sure that there we go. Oh, he's looking good, you guys. He's got his black shirt on. How's it going, JC?
Listen, it's been worse. It's been worse.
I can't hear you. Make sure that
I am on mute.
you can hear me.
Yeah.
All right. So, 1 second. I got you, buddy. I'm good to go now. Thank you so much, JC.
All right. Looking good, Jeremy.
Thank you, my friend. Thank you so much. It's just about to be full-blown summer here in SoCal, so trying to work on that Southern California look. Wow, do we have a lot to talk about today, man? The markets, they're giving us plenty to go over.
Don't they always? Isn't there always something juicy? You know, and listen, just because volatility spiked, just because maybe stocks declined or whatever it is, it's quite obvious that this is happening if you follow the news or you follow the markets. But this sort of thing happens all the time in many other asset classes. There's always something, some sort of volatility spiking somewhere, if it's in natural gas or in Japanese yen or in this case, small caps or crude oil. I hate saying this because, what, did I know this was happening? Do I always know something's coming? Of course not. But the truth is, nothing surprises me anymore. I've seen it. And again, I would say that nothing surprises me anymore, and then something would surprise me. And then I'd be like, oh, nothing surprises me anymore. And then something would surprise me. But seriously, at this point in my career, we have to expect the unexpected. I mean, that's just what it is. And that's why it always comes down to risk management, because we don't freaking know, right? But the good news is that nobody else does either. So it's a level playing field. So really the only, it's so funny because the fear and the greed and, keeping up with the Joneses and all these Robinhood accounts lately killing it, and everybody's, those Robinhood accounts that may or may not have been killing it lately are literally killed. And that's just the way the cycle works. So you can't be worried about other people and trying to keep up with the Joneses. Worry about yourself. Go about your own business.
Yeah, man. There's that old, what is it, lesson where I think it was John Kennedy is getting his shoes shined in Manhattan, and the little boy who's shining his shoes gives him a stock tip, and he goes back and sells everything. I was reading an article yesterday about how this tweet was reshared as the new poster child of the shoe shiner, because it's I don't know if you saw that, but it is basically the founder and CEO of Barstool Sports has been ridiculing Warren Buffett and saying that he's a has-been, doesn't know what he's talking about, and this is the easiest time ever to make money, and he's buying all this stuff, and everything keeps going up, going up, going up. And that tweet was just shared and saying, okay, if this guy who absolutely has zero backgrounds, not a chartered market technician like yourself, wasn't a formal financial advisor like me, is out there, just screaming, hey, I can make all this money anytime, the market may be a little overflated. And then sure enough, the very next day, we see the market, rip 5% off the top. So
but listen, something like what he's doing, the Barstool guy, listen, he's putting on a show.
Yeah.
It's a tiny fraction of his net worth. It's comedy. He makes people laugh. If you're getting upset at the things he's saying, you're looking at this all the wrong way. Number one. Number two, it's Twitter. So get a life, take your tie off, and just understand that this is one big joke. We're all here together making each other laugh. If you take yourself too seriously, or yet alone you take what's on Twitter too seriously, or what somebody said on there, what the hell's the matter with you?
Yeah, yeah, no doubt. Well, now that we've got most of everybody, I think, is here. We're 5 minutes into it. I wanted to do just kind of a formal introduction. My name is Jeremy Blossom. I'm the founder of TradeStocks.com. This is our new web series called The Charting Room. This was the original genesis was the COVID Market Watch, and me and my friend JC. JC is the founder of AllStarCharts.com. Him and I decided to go and cover the markets. He is one of the smartest guys that I know, and I absolutely believe in his trading methodology, and so does apparently a lot of other people. JC, you've got thousands of subscribers to your service all around the world, but why don't you introduce yourself and tell everybody about who you are?
So my name is JC Parets, and I'm the next Warren Buffett. No, I'm just kidding.
Nice.
Love Warren Buffett. You know, honestly, I want to go to Omaha for the Buffett conference, right? That would be cool one day. And the College World Series. College World Series, too. You know, and maybe catch a Nebraska Cornhuskers game or something like that. I don't know. Anyway, enough about Omaha. I am JC Parets, and I am a technical analyst. I analyze the behavior of the markets and therefore market participants. So I don't really care so much about what the Fed says or what the earnings release was or wasn't or unemployment. We don't worry about any of that stuff. What we're analyzing is what actually pays, which is price, right? The only way to make money in this game is to sell something at a higher price than where we buy it, and not necessarily in that order. So that's really what we're trying to do, is identify the direction of the primary trends and look for opportunities across markets regardless of the environment, whether we're in a bull market in stocks or a bear market in energy or whatever it is. There are always opportunities, and that's the beauty of it, that there's always another trade. So like if you're like, oh my God, look at those guys, how much money they're making. Listen, they're eventually going to go blow up. Don't worry about them. Worry about yourself and look for those next opportunities, because if you're so worried about what your neighbor's buying or the stock you wish you bought because that guy bought it or whatever it is, you're going to miss the giant elephant walking right past you because you're preoccupied with what else somebody else is doing or what somebody else is saying. Who cares what they're doing? Worry about yourself and look for opportunities, and don't worry about what other people are buying and selling. You know, because the market only guarantees us one thing, and that's that we're going to have more opportunities. So let's always move forward and let's always go out and look for them.
Absolutely. We're absolutely cutthroat. JC does not care if it's up or down. If he is short, he wants it to go to zero. And if he is long, he wants it to go to 1 million. He wants to go to the moon. So, and we always want it to happen tomorrow. So, absolutely, we don't care. It is absolutely unbiased. It's just letting the price tell us and dictate what's going on. So that's our introduction. That's who we are. Let us know where you're from. I know that Dale here is from Hawaii. You're welcome. He says, thank you so much. Aloha. Dale, is everything still shut down? So my trip, by the way, tomorrow, I was supposed to be on a flight with my family to Hawaii. I'm super bummed that we're not going, but please let me know if things are still closed down. Hopefully they're opening it back up out there. And everybody else who's here, one big part of the show is that this is interactive. So if you've got a microphone and a video, it's down. Okay. So if you have
tables and a microphone as well.
Exactly. If you have that, we want to participate with you. So ask questions. And let us know, right? Talk to us. We want to make this as interactive. This is all for educational purposes. This is for here to talk about the markets, things that we love to do, use JC's approach to the markets and trading the markets. We always give you free trade signals in this as well. So these are actual things that we're excited about. So without any further ado, and by the way, just so I can get caught up on this myself. So Dale's telling us it's still in lockdown. July 31st, we might be unlocked. And I would love to, Dale. I'll absolutely ping you when I'm out there. I'll be going to Maui, so I'm not sure what island you're on. But and he goes, I trade a lot, Oahu. I was actually in Oahu last year, North Shore. So if it wasn't for JC's wife being pregnant, I'd probably be able to get JC to come with me, but we'll do a family trip next year.
All right. Deal.
Yeah. We got somebody from Western Mass. That'd be great.
Berkshire's in the house.
Yep. I like it. Okay. So JC's got some stuff to share. JC, take it away.
So let's rewind, guys. One of the biggest reasons why we were so bearish coming into February, among some of the intermarket rotation into the more safe haven areas like bonds and gold, is that technology hit our target. You know, we had a target just under $100. That had been our target for years. Our target was hit. See you later. So, you know, when a quarter of the entire S&P 500 essentially hits our upside objective, number one, that's reason to, you know, kind of open our eyes, like what else is going on. And as it turned out, what else was going on is we were getting deterioration in breadth into early February, you know, and rotation into some of the more defensive areas. So like staples on a relative basis and things like that. So this chart, selling technology, helped us make a decision or confirm other bearish things that we were seeing. So what happened? We absolutely crashed, you know, one of the greatest crashes of all time, as you guys are well aware. And now we have come all the way back. So let's see what that looks like. This is not including today's data, and we closed on the technology at the lows at 98. So we are now below 98. We were below 99. So we're right there. So if this is a successful retest of that breakout, we're going to know right away. And I've got some stocks that I think that we can own. And if this is not that, and now we're going to absolutely collapse, we're going to know very, very soon. So first one is Microsoft. This is a stock we want to own if we're above 188. If Microsoft is above 188, we can be long. We want to be buying this pullback. If it is not, this is not something we want to own. But I think that the big names, the MAGA, if you will, Microsoft and Amazon and Apple, Facebook, like these big, massive ones. If this is just a, just sort of like a sentiment correction, if this is just a reset of overbought readings, if that's what this is, these are the names that we want to own, and we're going to know very quickly. So Microsoft is here. You know, if we start getting back above 188, we want to be involved and be buying Microsoft. Same thing with Amazon. If we're above 2,500, we want to be long Amazon. The trade was be long Amazon if we're above 2,400. That was our original trade. And then here we are where I think that we can manage risk even better. So if we, you know, if we owned it above 2,400, now I think we could raise those stops and only be long Amazon if we're above 2,500. So if this is just a retest, these are the names that we want to buy, because we're going to know that we're wrong very, very soon. If these things start breaking or they don't hold these levels that I'm mentioning, there are bigger structural issues out there, and this could be a rough summer if you're just a buy only and buy and hope investor, as I like to say. There's no buy and hold investor. It's a buy and hope investor, because buying and holding is not really a thing. It's a nice myth, but it's not a thing. And then look at Facebook, same thing, 210, my level here. If we're above 210, I think we're good. I think these are stocks that we want to own. So we're going to know very soon if this is going to be something more. But if this gets bought, I think these are the stocks that they're gonna buy.
Great. I love that, JC. Last week we talked about, you know, hey, we were saying I would probably start, well, I should say 3 weeks ago, almost a month ago, we were saying fading a little bit of this rally. Fade, fade, fade. The markets flipped. They did go into the bullish territory, and a lot of the things that we talked about doing last week was to go long, and that was the right call. So I did want to stop and kind of mention what you had talked about last week and then what has happened. If you had taken, you know, some of the signals that you referenced last week, you would have absolutely were probably in the black. I can't say 100% because I don't know what price you would have got in at, but those were the right calls to be able to make. And this is the beauty about your analysis. This is the beauty about your approach, is that today we can be absolutely bullish and tomorrow we can be absolutely bearish. We do not care. And we're not contradicting ourselves when we're saying we're bullish yesterday and we're bearish today. That's the whole point of our approach, is that we reserve the right to be bullish or bearish on anything at any given time, depending on what is happening with the price of the underlying asset that we're reviewing and discussing. So Wanted to make that mention because it was pretty cool last week of what you were able to call. It was a phenomenal week for myself. Thank you very much, JC. Appreciate that. One day I'll tip you out, man. And so some really good stuff. So I wanted to kind of mention that. So even though we've got a big pullback here today, based off of these levels, again, that's what he's always really, really good about doing. If this happens, then do this.
Because you need to live your life with an if-then statement because you don't know what's going to happen. So like, we want to go out and be social and be with people. Like, okay, that was a good strategy. And then a virus hit. So that's no longer a good strategy. Not only do you not want to be going out and socializing with people, like you were being advised against it. So we have new data. And then we have a different set of circumstances in which to approach, in this case, society and life. In the case of the market, it's the same thing. Like, okay, we want to be long the stock if it's going up. If it breaks this level, chances are it's not going up anymore. It's not something we want to be involved with, for example. Because, again, we don't know what's going to happen. The market is pricing in certain data. When that market gets new data, it starts pricing in a different set of circumstances. So it's our job to essentially interpret that behavior as, hey, maybe we should get out too, or hey, this is an area where we need to be buying stocks. And, we're running our scans right now as we speak. So our premium members tomorrow are going to get a note of the stocks and the sectors and the Dow Jones industry groups for that matter, and the international ones for that matter. I just had the conversation, so it's fresh in my mind. So we're running all the numbers on the areas showing the most relative strength from June the 3rd. That's the date that we're anchoring to. That's when the list of new 52-week highs peaked. So that was last week, Jeremy. And since then, we've seen deterioration in new 52-week highs. So that's a good area, a good date, I think, to anchor to. So we're going to look at some of the relative strength areas. And if this is a market that's going to get bought, this pullback is something that's going to get bought, that scan's going to reveal a lot of pretty solid names.
I love that, man. I can't wait. I know that I always look forward to those reports. So that's going to be exciting to go and see. Yeah. One of the questions I had for you is when you're seeing something like this, you just answered one of my questions. Is there a scanner or something that you go to during something, times like this? And is there an indicator or a certain chart pattern that you're like keeping an eye out for? Okay, big pullback. I'm going to be looking for these things. And if so, could you show us some of those examples?
Yeah, you know what it is, Jeremy, is that every environment is different, So I wish I could tell you like, all right, so, this does this, so we're going to do that. And this is it, I wish I could tell you that it's that clean, like an algorithm. I know how you guys are with your algorithms. Doesn't work that way. We need to figure out, okay, what has the market done? Because what it's done has never happened before. Just like what it's going to do has never happened before. Every single time is different. So it's not that it's different this time, it's different every single time. So let's remember that. So people are like, oh, this is 1995 all over again, or this is 87. It's like, no, it's 2020. Like certain things might resemble that particular thing, but let's be serious. This is its own environment. So what's happened? We got a correction where the leaders bounced the hardest. There were certain areas like financials and industrials, transports, Latin America, emerging markets not participating. We got rotation into those areas, and which is a good sign for the overall strength of the market. And now we're getting a pullback. We're getting a digestion of those gains. So because that's what got us here, we have a question, right? And every market environment provides different questions. Technical analysis doesn't give us all the answers, but it helps us ask the right questions. And what's the question right now? The question right now is this pullback going to get bought? Is this just a correction within an ongoing uptrend? For you Elliott wavers out there, is this a wave two, correction after that initial thrust? I don't go around counting waves, but with respects to the principles, you get the initial thrust, you get that correction, and then you get that big third wave, right? That's the way the markets behave. Whether you believe in Elliott wave or not, is not really the point. That's just how markets behave. So is this that sort of scenario? So that's the question. Okay, fine. So we don't know the answer, but we know that that's one of our questions. So depending on what's going to happen, we want to be prepared. If this is that wave two, if this does get bought, if this was just a retest of the breakout, if this was just a sentiment rebalancing, if you will, the stocks that I pointed out, some of those large cap names that have shown relative strength are going to get bought. We want to be in those names. The names that are going to come up in the scan that I'm going to get the results of tonight are probably going to be big winners. Those are the ones that we want to be involved with, right? The ones that have had the most buoyant correction, if you will. So those are the things we're looking at. Now, what if this is the start of something more, this second wave, not the second Elliott wave, but the second coronavirus wave, as I'm hearing, is like the big to-do these days. What if it's that, and now we're going to get another, massive sell-off like we did in March, right? That's certainly a possibility. What's going to happen? Well, any of those names that we're looking to buy are not going to be above the levels in which we want to buy them. So not our problem. Let them go to zero. Not my problem. Or if we actually do enter, we're going to get stopped out really quickly in the next coming days. So that's really, when you ask me, when something like this happens, what's your go-to? Well, right now, that's what we're doing. Perhaps in a different environment, we'd be looking for different kinds of stocks. We'd be worried about different kinds of things. But that's what's got my attention.
Yeah. All right. Great. I'm looking at the U.S. equity sectors here across the board. We've got today, and this is just today, but we've got everything from consumer staples all the way down to energy in the red. We've got some of our favorite stocks, like the communication sector was down 4.7%. You got utilities down 3.9%, with the energy sector getting hurt the worst. And we also did see, though, a little bit of an uptick in the treasuries. And so I'd love to try to get, as you go through, everybody who's brand new, JC does this kind of like top-down approach, macro approach. So I'm bringing up some of these different sectors and would love your opinion on it. The NASDAQ was affected the least out of them all, right? With the Russell 2000 being affected the most. And then I'm seeing red everywhere. The only green I see is natural gas.
I love that you have natural gas on your radar, though. It's,
I only have it because you mentioned it, by the way. You had an ETF and a natural gas trade that I think was at 160. Let me look at this.
Yeah, something like that. Yep.
And you did. You had it at one. I mean, you loved it.
It's been choppy.
It's been, it's still 21 cents above the 160 mark. And if depending on what your call was, it did make it above 2. So I never ended up pulling the trigger. I think actually it was 2.
Yeah, it had a couple of good spikes, but like you would have had to get out at the right time. It's been choppy. Listen, it's been making money, probably not as much money as a lot of the other things we've talked about, like some of the individual stocks. But yeah, they hit the stuff hard today. Transportation, energy got hit real hard. All the biggest losers from the initial collapse in February and March got hit. Obviously, something like bonds is going to get a sympathy bid on a day like today. I'm surprised it's not more, as a matter of fact. How did bonds finish up today? Bonds finished up. Yeah, I mean, listen, there was a nice little bid. I'm curious to see how this resolves. I'm actually going to be speaking tonight, which is why we're doing this a little bit early. Tonight, I'm speaking at the New York City chapter of the CMT Association, and I will be on a panel with my good buddy Dan Russo and also Paul Sienna. And Jeremy, Paul Sienna is the chief technical strategist of Bank of America Merrill Lynch for fixed income commodities and currencies, right? So for FIC. So he's the interest rate expert, if you will. And he, I'm gonna bust him tonight, but he's been telling me U.S. rates are going in the negatives. And when you say, well, JC, if U.S. rates are going to negative, and I was asked that today, like, JC, what negative rates, what's the trade? Buy bonds in that environment, right?
Correct.
So something to think about, and I'll be talking with Paul tonight, and I will report back.
Yes, I'm really looking forward. I mean, you have a big day today. I wish I could be there, actually. I'd love to hear what he says. And it'd be kind of fun to hear what kind of questions come up as he's doing his analysis in your mind from one CMT to another. So really cool.
Jeremy, him and I studied for our CMTs together, like in 2006.
Wow.
Yeah.
Wow, that's pretty amazing. I mean, that's the types of connections. Again, for those of you who don't know JC, we talk about it a lot in this show. It's all about who you know And JC is in really good company. So he is hanging around some really, really big players. And when you have that type of water cooler ability to go and ping someone and say, hey, what do you think about this? I'm seeing this. And you can get some confirmation, some bias into what you're seeing and they're seeing. It really does show up in the end result from an ROI perspective on your trade. So anyway, cool stuff.
No, I mean, listen, I appreciate it. I love having conversations with these guys. I need to be careful, because I do my own analysis. So like, I don't want to give too much weight, but what I really do use my friendships for is just ideas, like a different perspective. Maybe we're looking at the exact same thing. We're agreeing 100%, but we're looking at it in different ways. So stuff like that helps me communicate to clients and investors and fellow traders sort of what I'm thinking. Like, fine, maybe my chart didn't really quite get across to you, but this is my buddy's chart, basically saying the same thing. Like maybe that you'll finally get it if I show it to you, like that or something, so
Yeah.
it's cool. I'm always learning from these cats, always. But I want to show you this chart. Growth versus value has to be something I hear all the time. We're back to those 2000 highs, really, really, really interesting chart that was on our top 10 charts, Jeremy, by the way, that's been going out. I don't know if you saw the latest one.
I saw one today. Yeah.
This is the 1-day change in the VIX today. Biggest change in the VIX that we've seen since early 2018. So biggest 1-day change in the volatility index in a couple of years. So that's interesting. And then another fascinating one that we've been talking about is what the bond market is pricing in for inflation. So let's see, how did the US 10s finish up today? The US 10-year yield, we finished down near 65 basis points. So, the big question is, if interest rates are going up, then there's got to be some sort of inflation being priced in, right? And what we've seen from the bond market for a long time is no inflation being priced in, quite the opposite. So if the bond market is going to start to price in inflation, this would be a very logical level for that to happen. Here we're looking at the inflation protected treasury securities relative to traditional non-inflation protected. So that's the ratio. How's the bond market feel about inflation? And if rates are going higher, then it needs to be one of those scenarios where the bond market is really confirming, because why would rates be going higher unless they're trying to counter some sort of inflation? So this would be a logical area for it to do that. But man, if US 10-year yields start breaking down below 60 basis points, I think Paul's going to be right pretty quickly, and we're going negative.
And if we did so, and that would mean what, from like a deflationary environment?
Deflationary, disinflationary, whatever, just not inflationary. Here's another one basically telling the same story. This is the copper gold ratio. If interest rates are going up, copper gold ratio needs to be above those lows from the 80s, right? This is a chart of interest rates. Copper gold and US 10-year yield trade tick for tick. So this would be a logical level for this inflationary sort of rotation to take place. So these are the things that have our attention. Same thing with Aussie yen, another great ratio, really pricing in inflationary forces. If we're above 71.50 in this, we can probably make that argument. And then same thing, look at financials on a relative basis. If financials are going to outperform, this would be a perfectly logical area for it to happen. And I'll say this: when markets don't respond to logical levels, when market patterns don't resolve the way they traditionally should, or hold levels that they traditionally should, it's happening for a reason. So we're really, really looking at these levels, really important, because if these do hold, then this pullback in stocks is probably going to get bought. And those names that we've talked about, that we're talking about, are going to probably do really, really well. But if we're wrong and this doesn't get bought, all of these ratios I just showed you are going to roll over, and those interest rates are going to go negative, and those bonds are going to spike, and shit is going to hit the proverbial fan.
Yeah, because that means we're in a deflationary environment, right?
I mean, it's an environment where stocks aren't going up. So,
No,
from an
correct.
economic...
Inflationary environments, to a lot of people don't understand this. This is a good topic to talk about, but inflationary environments, stocks go up. So Stocks are a great investment during inflationary environments.
Yeah, and
So
then people will be like, "Oh yeah, well, gold, yeah, well, gold didn't go up today, so."
yeah, and gold can, sure, gold can also commodities. There's a lot of things that rise up, but from a performance perspective, typically it is the equity markets that do really well. So in a deflationary environment, correct, we've got the opposite. So yeah, it is going to be a really, really interesting time. What I don't know. We can change the topic. I get all into some macroeconomics and currency devaluation type conversation. So really, really interesting. Okay, so I know that a big part of our show is that we talk about different stocks that people want to see, markets that they want JC to cover. What's so great about this, and the reason why we do this, is I really want to show off what technical analysis can do for you. Technical analysis is really, I think, one of the most sophisticated and best ways for active investors to manage the risk and to find the best reward potentials that are in the marketplace. JC has an affinity and a knack for finding trades that have what we call an asymmetric risk reward ratio to them. So, JC, out of your own mouth, can you explain what you mean by asymmetric risk reward ratio trades? You really do have an amazing ability to find these, but what are they?
Yeah, I mean, listen, we do our best to be on the right side of the trend, right? We do our best to, identify the direction of those trends and isolate opportunities that we think we can make money. But where the real value, I think, is in only presenting opportunities where the reward is exponentially greater than any risk that we're taking. Ideally, more than 5 times the risk we're taking. In a great scenario, 10 times the risk we're taking. In other words, for every $1 that we're going to risk in the off chance that we get it wrong, we can make 10 in the case that we're right. And I say off chance because the truth is we always assume we're wrong, right? It's not, I don't care how much money we can make. I want to know how quickly will we know we're wrong. That's more important to me than anything else. So how quickly will we know we're wrong so we can go and look for another better opportunity? And if we are right, how many times greater is that potential reward than the risk that we're taking? And if it's a 50-50 risk versus reward, that doesn't make any sense to me. I want that skewed in my favor every single time because that's how we're going to win over the long run. And speaking of good risk rewards, let me just show you what's going on in the NASDAQ. So this is the leader, Jeremy, right? This is the NASDAQ 100. And here we are. Here's where we got bearish stocks last time. And here we are now. From failed moves come fast moves in the opposite direction, Jeremy, is how I learned it. And 235 in the QQQ is the level. 235. If we're below 235, this is just this is a market that remains below overhead supply. If you want to short the NASDAQ, have a ball. If we're below 235, I don't have a problem with a short position at all. We want to see how this weekend, see if they come in and buy it on Friday. But if you want to be short, if the NASDAQ, again, only if the NASDAQ's below 235, if it's above that and you're shorting it, I think you're going to get run over. But if we're below that, the risk versus rewards in favor of the bears. I mean, it's just what it is.
Yeah. Yep. And I love that. So how many of you, and there's some people who have been commenting, I want to get to these, but how many of you have ever heard of anybody who talks like you do, JC? When you say, well, I mean, look, it's refreshing. I look at a trade expecting to be wrong. When you do that, not only do you have a firm grasp of reality, because the reality is that although you are a smart guy, JC, and your wife would say incredibly good looking, but you do not have a crystal ball and you don't know what's going to happen tomorrow, and no one does. So the fact that you're going into that and saying, look, like these markets, there's something happening and the markets can do something. So what are the odds of it doing something? And if it does do that, what would happen next is I think the smartest way to approach a trade. If I'm dead wrong, what's the worst thing that could happen to me? And if I'm right, what's the best thing? And if it's not 10 times more advantageous for you, JC, to do something, you don't do it, just won't do it. Because assuming that, guess what? If I'm going to be wrong, this is what's going to happen. So why take on that risk? Where's that? Why should I do something like that? So it's just refreshing. And I just wanted to point that out. I think it's really cool that that's the way to come up with your ideas.
Always. And I've done this in my other ventures. Like I'm making wine out in Napa, as you're well aware. And the risk reward is very much in my favor. Like the worst case scenario is like, we got a bunch of booze to drink, right? That's the worst case scenario. The best case scenario is now we're in the wine business, which is super cool, right? So like the risk reward is like crazy skewed, and I have found myself thinking like that a lot in life. Like, all right, so what if this goes terrible? Well, no big deal. Now we have a bunch of extra food to eat. What if nobody shows up at my party?
To bring this full circle, that's exactly how Warren Buffett actually thinks about things, right? He's just got a different approach to it. He goes and says, if worst case scenario, and I had to sell chunks, sell the building that the business is in, the equipment that the business, patents the business has, he starts to take all these things and says, if I had to go and fire sale and liquidate, what am I going to get, and how much am I buying this business for? And sure, he might take a little bit of loss. Okay, maybe he's going to take a 10% loss to do a fire sale. But if the business turns around, or if this sales manager does this, or this product catches fire and does that, guess what happens? He has this massive upside potential. So there is a very systematic approach. Our big background in our company is marketing, right? Media buying. So many similarities are there too. It's like, where's that risk to reward ratio? So really, really cool. I know that we want to get to these questions. I can talk forever. So one of the things I wanted to bring up, we talked about volatility. So I was actually trying to find this as you were talking and get into this. This is JB. VIX big strong jump today, up from 200. Moving average to the 50-day moving average.
And the VIX.
Yep.
Yeah, we don't really move. We don't put moving averages on the VIX. We do very little VIX analysis. I mean, really, what it is a derivative of the S&P 500. I mean, what is the VIX doing? It's taking the implied volatility at the at the money calls, right? And the S&P 500 really at the money, both sides. Basically, how much in a given day is the market pricing in? So you take the VIX, you divide by 16, and that's what the market is pricing in for an intraday move in a single day, right? That's the way the math works. And that's really the extent of our volatility index analysis, is really what it is. Because it's a derivative of the S&P 500, we focus more on the index level itself. Not that those data points don't matter, it's just not part of our individual process.
Yeah, that's what I figured you'd say. You can't run analysis on something that is it moves because something else moves, right? So you look at the underlying asset, and then and it's always going to be lagging. There's nothing.
It's a mean reverting derivative product.
Yeah,
it's not a trending asset like Microsoft or Tesla or whatever it is. I have an interesting one here for you.
Okay,
especially for Jeremy. Heyo.
Yes.
So what's on the bullish side of gold, gold hasn't broken down yet, right? We've been talking about gold breaking through 1680, and if that happens, that could leave a huge set of buyers up here, that are just now wrong. So you'll have a bunch of dead bodies above head, right? We haven't broken below that, but gold wasn't even up today. If the gold bugs are looking for, if the gold bugs are looking for like stocks to fall, today simply was not that, number one. Number two, gold miners lost 5%. So not exactly a safe haven of any kind or anywhere to hide. So that's kind of the bear case. And then short term, when you zoom out, right, as they say, whenever in doubt, zoom out, we're basically right in the middle of this range. From the former all-time highs down to support right around 1,500 or so. That's where we are, right smack dab in the middle. So I'm really curious to see how we resolve this shorter term consolidation. It's going to give us a lot of information on the next direction of gold. In fact, If this resolves lower, the bet is we go retest that 1580 level. And if this resolves higher, the bet we make is that gold makes an all-time high.
Well, thank you for doing that. You beat me to the punch. You know, one of my stocks and markets that I wanted you to look at, I should say, asset I need to look at is gold. So thank you for doing that. I'm following that very, very closely. What about BAC? I know that Dale from Oahu wanted to look at BAC. You're going to hear a lot more, I'm sure, about them tonight. But and also WFC as well. And if anybody else wants to throw their ticker symbols in there too, this is the time to do it. We'll get to as many as we can.
Wells Fargo, what a piece of garbage. I mean, this thing's been quite a piece of garbage for a while, you know. But it's an interesting couple of things that I think we should talk about with respects to banks, because I think they're a proxy for a lot of the things that we've been seeing. So here, hold on.
Well, it looks like I'm frozen on my end. You can still hear me though, right, JC?
I hear you loud and clear, yeah, but you're having some audio issues.
Okay.
All right, so let me just share my screen. So what are we looking at here, right? So we are looking at shares of Bank of America resolving this consolidation here higher, right? So you see this consolidation, it resolved higher, not lower. Whoops. So what we want to do is sort of look at these former highs, right? And then notice how Wells, because it's a piece of garbage, didn't do that. Right? So what are we looking at? We're looking at Bank of America resolving this consolidation higher in a similar way that US 10-year is trying to resolve this higher as well, right? So if this is not that and this fails and this resumes the downtrend, that's precisely what Bank of America is going to do. And notice how Bank of America at least made new highs. Wells Fargo couldn't even do that. So when you talk about relative weakness, Wells Fargo is exhibit A of relative weakness. Like, it is the worst of that whole group. So I think Bank of America right here, look at these highs right around, 25. That's my level. If Bank of America is below 25, which currently it is, there's just no reason to own it. If we're above that, I can see the case for an upside breakout when a consolidation is resolving higher. Buy it all day. But if we're below 25, this just isn't that. It's more of instead of maybe like a symmetrical triangle breaking out, this is more of a rising wedge breaking down. So those are the bearish implications. So I think we may have lost Jeremy. We got Jeremy back. There he is.
I'm here, buddy. Can you hear me?
I hear you loud and clear.
All right, good. I was making sure that everything was good on my end before I decided to jump back in. And that's good for your analysis is really good for Dale, because he says he was reading Wells Fargo. So that means everything is checking out there. And let's see here. Lulu, Lulu is another one. And then we have SWN, the next one on deck.
Yeah, I mean, Lulu, basically what Lulu just did is just resolved this little bull flag. Looks like it's resolving lower is really what it turns out. So let me just pull this up. Just so you can kind of see what's going on.
I got JB saying that Lulu earnings today after hours down $17.
Which is not much for a stock like this. So here's the deal. So let me So this is what's happening. So we're now breaking below. So this bull flag, you see this?
Yeah.
This is what we call bull flag. This is a textbook bull flag, right? So you're in a rally, strong rally. We start consolidating. If this is what we call a military fade, high and tight, right? This is what a bull flag is. And this is what it is in theory. We don't know that it is, but this is what those things look like. But what is the market telling us? Is that it's not that. So when bull flags do not resolve higher, do not finish their consolidation in the direction of the underlying trend, that in and of itself is the signal.
I like it.
So it's not something we want to own with this thing resolving lower. Quite frankly, if Lululemon is below 310, it's not anything that we want to touch.
Great.
And then here's the Southwest Energy, right? That was the big question.
Yep.
So energy is a big question, right? Because it's like, okay, are we going to get this rotation into energy and it's going to continue? Because, I mean, man, there's been crazy amounts of alpha, in the dislocation in terms of returns from month over month to week over week, from technology to energy. I mean, huge differences where if you're in the wrong sector, you're not outperforming. In the case of SWN, for me, I don't love talking about little stocks like this, but 3.25, that's the level. If we're below 3.25, it's a short or a no long. But you can't own it if it's below 3.25.
What about TLT, Mr. D Young?
Yeah, I mean, listen, if the market's really going to collapse, then bonds are going to rip. For me, 170 has been that level. I'd rather be long bonds if we're above 170. In the meantime, it's going to be a range, right? It really is a range-bound market. We don't always have to be aggressively long or aggressively short or putting on a position. Bonds are literally in the middle of a range. U.S. 10-year yield literally in the middle of a range. I mean, it's just what it is.
Yeah. Yep. And that's some of that stuff, as we talk about this, guys, like the TLT, I wanted just to make sure that we're on the same page. Oftentimes I think I know what you're going to say, and I'm like, I'm learning a lot from you. So is this what you're going to say? And usually it is. Sometimes I'm shocked. I'm like, wow, okay, what do you mean by that? You do such a great job explaining it. But yeah, if you guys are paying attention, like we did cover a few different markets. And I hope now, if you've been here, especially for a few different our shows, you're seeing how each one of these markets start to play off of one another. One of JC's favorite things is to look at is divergence. Is it doing something different than what it normally does? These are things that he pays a very serious attention to. Most of the things he sees are stuff that is boring, so to speak, doing exactly what it should be doing, and it looks like there's nothing worthy going on, and so he stays away from those. He doesn't try to make a picture out of it when there's nothing there to see. It's like move next, move on. It's the ones that are like, ooh, this is looking really good.
It's not all the ones that told me no. It's that one that said yes. Her name is Morgan.
I love it. Yes. Great.
The one that said yes. Like, don't worry. I don't remember any of those girls that said no to me. I've never thought about them again. And plenty did. Trust me.
Yeah. Dale, what you putting down? He said sort of like dating right as you were saying. Wow. You guys he's on it today.
That's right. That's right. So we're going to have a lot more information, not just with tomorrow's close, but with the scans that we're currently running, where if this does get bought, we're going to know exactly which stocks we want to be buying. If it does not get bought, we have levels set on everything, anything and everything. Volatilities are elevated now, Jeremy. So we want to be erring on financing our options trades instead of just buying naked premium. Make sure it's probably a pretty good time to be financing those trades for sure. And then Monday's our monthly conference call. So I have so many charts to look at this weekend, a lot of weekly charts to get ready for that conference call on Monday. I'm stoked. I know some of you out there will be there. It's a conference call we put on for premium members. We've been doing this since 2015. In fact, Jeremy, I don't know if you know this, but every single one of those live conference calls is actually archived going back to 2015.
Wow. Wow. No, I did not know that.
You can go back.
So how many of you wish that you could have JC with you every single day? Right? Like literally.
Does anybody actually wish that?
I know. Well, Wilson does Morgan. That's why she married you. She wished that, and she got her wish came true.
Ooh, sometimes she regrets it.
So I know that what would JC do? Right, is a question I ask myself a lot when I'm looking and analyzing positions that I own, or positions I'm looking to get into. And one of the things that, although JC can't be everywhere at the same time, and although we wish we could have access to you during every single market session for the entire session, we just simply don't. But something that you've done that you've been really, really proud of and has gone absolutely gangbusters is your special course that you created. And so JC has put together the world's best course on charting and market technical analysis. And he put hours. The guy who actually worked with JC on that is an Emmy award-winning producer. The guy has made some amazing films, and he is a really good friend of yours. And so you've got an Emmy award winner who helped put this together. So you got one of the brightest guys in the world, of only 2,500, 2,600 CMTs in the world. And you're literally on the forefront. You are ranked as one of the top 10 to follow on Business Insider and Market Watch on Twitter. You were with all the major institutions and banks around the world. These guys all look at you. So again, everybody wants a piece of JC. So what you did is you said, sure, here's what I can do one better. I can help you understand the markets like I understand the market. So you put together a course. And so what I wanted my team to do is drop the link for this course for everybody that's here to go and take a look at it. There it is. Take a look at this thing. This is an absolute no-brainer. If you're having issues finding 10-to-1 risk to reward ratio trades, and you want to be able to do this on your own, once a week and join us, right? You can absolutely join JC's premium service. It's his flagship service. That's what all the institutions are subscribing to. By all means, we want you to do that. But if you also want to be able to understand this, that Dale has a really good understanding, a lot of people here have some really good understandings, they're making great calls, then this is the type of course for you. But I can sit here and talk about it all day. Do you want to fill everybody in a little bit on what you did to make this course so amazing, JC?
Yeah, I'm just in a unique position, Jeremy, that, early in my career, after college, I lived in New York City for a long time. I was there for 15 years. So I went to every CMT event I can go to, every event that I would get invited to at Bloomberg or wherever it is. I saw everybody. I met everybody. I mean, a lot of people, maybe not everybody, but a lot, more than you would expect. And just being around those people, asking the questions, listening to them say certain things, the common denominators between them. I mean, it's just such a huge advantage. And I just wanted somewhere where I could just dump it all. So be like, look what I learned, and these are lessons I personally had to learn the hard way. Uranium in 2010. There were lessons that, good. Man, I remember this bond trade. I'll never forget it. Sentiment was this. Like, I'll tell you stories about how I learned certain lessons, who I learned those lessons from, Luis Yamada and Jeff DeGraff and Ralph Acamporin. I try to give credit where credit's due because I invented very little of what's in that course. It's really just bringing it all together. Not to mention, I've done over 100 podcasts with the best technical analysts in the world where I selfishly ask them the questions that I want to know the answers to. Like if nobody was listening and we're just hanging out at a bar, right? That's how I treat these things. Totally. It's a very selfish endeavor. I hate to burst everyone's bubble, but I hope you like it too, because I definitely have fun doing it. So that's what this course is. It's just a total dump of everything I've ever learned. And then the way I see it is the more you understand our process, the more value you're going to get from our research.
Yeah, no doubt about it. And the quicker things will make sense for you. So, there is a connection between the logic and emotion. I don't care who you are, regardless of how stoic you think you are when it comes to it, there's absolutely emotion involved. your rationale is in line with the emotional feeling or sensation that you have, which is not of fear but of confidence. So if you want more confidence in what you're doing in your day-to-day trading decisions, it will make you, having the right confidence with the right knowledge, it will make you more successful trader. I can't think of a place to start. And he just said it, you said it really well. All of the sum total of these amazing conversations, books that you've read, conferences that you've been, travels that you've been all around the world, you've put into this course, and you did a phenomenal job. So there's the link for it.
And just dinners with billionaires, dinners with billionaire investors, household names. I'm not going to name drop, but you know, it's plural. I had a couple of those in my belt.
I have a special guest for us today, JC. So to end the show today, come on over here, honey. My daughter is here with
bringing
me
in the
today.
big guns.
Yes, I do. This is Addison. Say hello, everybody.
Hi, Addison.
So Addison is here, and she has been listening. And yeah, I was going to have her come on in the very beginning of it, but she was a little shy, and her lunch came. So we're on the West Coast here, so it's a little earlier than for on the East Coast. But I really wanted her to come and say hi and end the show with us. And do you want to say anything, honey? No, she's good. All right, everybody. Sorry we weren't able to get the different ticker symbols today. JC, you're welcome. I think we have a couple more minutes if you wanted to get into it. Otherwise, I wanted to let you get ready for your big night.
Yeah, I got to get ready for my big night, but I'll tell you this much. Go to allstarcharts.com because we're going to be putting out, you guys are premium subscribers. I know there's a few of you there, John. We're going to put out the scan results. I'm pretty excited about that. Not to mention these weekly closes are going to be really, really important. And we're going to be getting ready for Monday's call, and I'm super stoked. The over-under on charts for Monday is 150. Jeremy, do you take the over or the under?
Over.
Smart man.
Over. Easy, man. Are you kidding me? Over.
In an hour? Man, that's a lot.
I think that with everything that's been going on, man, I'd be shocked if it's not like 160 something, dude.
All right, done. Let's see. And I don't count until the end when I can see the number. So, it is what it is when it comes out.
Awesome.
All right. So I look forward to those publications. They'll be out, and I look forward to writing and reading them. You're amazing. JC, thank you so much for your brain, your presence, and for your time today. All of our attendees, we look forward to having you back to the charting room next week. Until then, be well and profit. See you guys.